Hi, this is Anthony. Welcome back to my show. Remember, I'm not a financial analyst. I'm not a financial advisor, just somebody interested in the stock market who has been fairly successful recently in the last 15 years or so. I've been interested since the stock market dropped 22% when I was in high school in 1987 and been studying it ever since. I think that for most people in the industrialized West, you should have a long term time horizon as far as investing and generally be in some broad based mutual funds or ETFs like an S&P 500, NASDAQ, Dow Jones Industrial Average type fund. But sometimes it's fun to look at individual stocks and add those to your portfolio if that's the appropriate thing for your situation. And everyone's situation is different. Let's look at JM Smucker. I think that sometimes having some exciting high growth stocks like Palantir and Nvidia, which I have a lot of both of those in my portfolio, are great, but sometimes also having them balanced out with some slower moving, but hopefully moving up over time, boring stocks like trash haulers, waste management, and Republic Services, for instance, which I have 10 shares each of those. Now, this is one that I found. I've, of course, heard of JM Smucker before. I was doing some research on some other companies and came across this one. I thought I'd check it out. Thought, not for me necessarily, but this might be a company that is growing long term for some people, although there's a lot of food companies that aren't doing so well. There's so much competition. Everyone needs to eat food. And the problem with food companies is they have competition. There's, about six big Western industrialized food companies in the world. And so there's a lot of competition. Also, there's, various government regulations and things like that that affect food and commodities. But let's look at JM Smucker. Now, of course, it was down just a little bit yesterday, about a third of 1%. Much of the stock market was down. Different indices were down quite a bit yesterday on news about Trump and his attitude towards President Xi of China and possible tariffs in the future and frosty relations between the United States and China. We have different, pieces of news coming out from Washington, D.C. that can move the market, but often just for a day. Anyway, down a little bit yesterday. 5 days down almost 3%. 1 month down 5.5%. 6 months down 10%. Year to date down almost 6%. 1 year down 10%. 5 years down 11%. And max, it is up $80 a share, 328%, but that's starting back in 1994. So, 30 years ago, roughly, maybe a little bit more than 30 years ago. That's not necessarily a really good rate of return, and I'll show you why. They do pay a quarterly dividend of $1.10. That's currently a 4.20%. That wouldn't be bad if the stock was going up, but remember, if we go out 5 years, it's down. 1 year, it's down. Year to date, it's down. If you would have bought as much as 10 years ago, you'd still be down. Why invest in stocks if you're going to be down? So let's look at something that is easy to get into. Vanguard S&P 500 Growth Index. So this isn't the S&P 500. It's a variation that focuses on growth. So it tends to do a little bit better when the S&P is going up, 500 is going up. Probably goes down a little bit more than the S&P 500, but if you believe in the American market economy going up in the future, then this might be a little bit better than the S&P 500. It was down 3% yesterday when JM Smucker was down 1/3% or a tenth of that. Take a look. 5 days it's down because of that big drop there. Otherwise it would have been up. 1 month, pretty flat. 6 months, you're up 30%. Year to date, you're up 16%, 22% for the past 52 weeks. 5 years, you're up 100% roughly. Okay, let's compare that to 5 years with J.M. Smucker. You're down 11% over 5 years. You're up almost 100% in the past 5 years with this. And also, you are getting some dividends on this. You get some of the dividends that are paid by companies that are within the S&P 500. And then Max, this particular one just goes back to 2010. But you'd be up 738% in the past 15 years or so. Okay. I think I'm going to end there. I just caution people about investing in food stocks. We don't need that. Although, while we're here, let's take a look at Keurig Dr. Pepper. Evidently, Dr. Pepper is the product called Dr. Pepper is the second largest carbonated category, or not category, but specific drink after Coca-Cola Classic, even above regular Pepsi, is from a chart I saw. Now, this is the Keurig coffee and Dr. Pepper. Down barely anything. 5 days. 1 month down a little bit. 6 months down a little bit. Well, down 26.5%. Year to date down 18%. Down 30% for the past year, or 52 weeks. Past 5 years, you're down 11%. And then Max, you have to be careful with charts where there's a stock split. Sometimes the charts are supposed to adjust for stock splits so that whatever the price currently is now, it will adjust it so that it might show that a stock that's $100 now, you could have bought for $2 30 years ago. But in fact, 30 years ago, the price of the stock was perhaps $20, but then it grew so much that they split it. When you see charts like this, that may be an indication, and I haven't looked at this chart until right now. I'm not really interested in investing in the company. It could be that what happened is they split the company and issued shares for another part of the company and gave that out as kind of a dividend, but shares rather than cash, to stockholders. So they may have divested themselves of something. Or it could be that the chart is not taking into account a stock split, which you sometimes see, especially right after stock splits. So I don't happen to know right now. I could do some more research in the future on this. Again, I'm not really big on food and beverage stocks just because there's so much competition. It seems like every day some little brewery is filing for bankruptcy these days. So it's a really tough business to be in. Again, the whole purpose of investing in the stock market is to make money. All time here, from 2008 to 2015, you'd be up 2 cents based on this chart. Again, we have this anomaly here. You might have got extra stock from some other company that they spun off. I'll do some research and update this at some point. But for a lot of people, just investing in something like the S&P 500, VOOG, SPY, DIA, QQQM is probably going to be a more prudent, better deal. It's not going to go up as much as NVIDIA or Palantir, but this is the type of thing that you could buy the stock, buy the shares in the ETF, and then forget about it until you retire 20, 30, 40 years and be pleasantly surprised by what it's gained, and also you're getting some dividends. So I'm going to end here. Remember, this is not financial advice. Don't buy any of this stuff that I've talked about without doing your own research to make sure that it's appropriate for you. Everybody has different needs, and depending on what country you live in and the economy, inflation rate, something that might be appropriate for an American or Canadian might not be appropriate for somebody in Zimbabwe. I'm going to end now. Hit like, hit subscribe, leave a comment. I always read them, and eventually I get around to responding to them. Thank you so much. I really do appreciate your time.